So let's say that I'm long Apple, which I am. And I do want to buy some protection on the stock. Like how far out should I be looking to buy puts?
So when you're looking at puts, I think a lot of people I think there's going to be some interesting moves coming in at the end of the year. I don't like to go out too far. I don't think you want to go out, say, 160, 200 days. I usually look at around that 60 to 100 day time period, which would put you kind of into the January, February time period. So I would look out to January, look out to February. The good thing is if you start seeing some pretty significant moves, in either direction ahead of that time, then those options will likely offset some of that. Let's say if you do buy some puts in Apple, we get some news from Apple next week, and Apple maybe pulls back towards that 115 or 110 level. You can start to say, looking at that and saying, okay, you know what, if it does pull back, yeah, I'm giving back some of these gains I've had by holding on to this, but that put is going to go up in value to sort of offset that. So looking out about 60 to 100 days, January, February, I think that is an interesting time period to look at. The next thing becomes which strike should you maybe look at selecting. So if you're looking out to January, what a lot of people like to do is look at technical levels. And I know everyone likes to think if you're an options trader, you only care about the math side of things. You don't look at charts. You don't care about technical analysis. I disagree with that, because what you can actually maybe look to do, and I see that 109, 108 area as sort of a support level that is held since August. What some options traders will do is say, look, if it goes back down to 110, I think that support will happen. But if we break through that, then look out below. So what some traders will do is they'll actually maybe look just below that support level, and look at strikes around there. So you could look at the 105 or the 107 and a half put strike in the January expiration, and that comes out to about a $3 put option that you're buying. But if you do start to see pronounced pullbacks or even just a simple rise in volatility can actually increase the value. If you see the VIX maybe go back up to 35, that'll likely push the value of options, the premiums, up across the board. And you can see an increase in the value of those options just simply from volatility increasing, even if there's no accompanying price move.
Okay. All right. I like it. I like that you took me all the way through it and even suggested where the trade can be. So again, that was I am long Apple as an example. So I'm looking maybe that 60 plus day out range. Buy some puts, they're cheap.
There you go.
I like it. There we go.